If you own a fund, an ETF that is about to reverse split, we're going to show you in this video what happens. I'm going to explain it to you intelligently, but I want you to know it is the worst thing that can happen to an investor. Let's look at this person. Okay, now Tesla had split, 2-for-1 before. So if you had 2 shares at $10 each, they gave you 1 share at $20. Look what happened to this person. So you would expect more dividends, right? Because they took half your shares. Okay, so let's look at this guy's actual comment. For example, Tesla split before the dividend was 81 cents. So was the next dividend twice that? No, it was 81 cents again. Why wasn't it $1.62? So half your shares disappeared and your return went down by half at the same time. Please explain how reverse splits make any difference or make no difference to my portfolio. It's not the split. It's what happens after the split. You see, after the reverse split, let's look at this past year. After a reverse split, the price comes back up. If the fund continues to poorly perform or overpay, or yes, we have to blame the underlier. In this instance, it was the underlier. It was just too volatile for a covered call fund, or at least the way Tesla was written in the prospectus, which, again, a prospectus is a guide. It can always be changed, like the way they changed for Alti. So you have half the shares you had before, and your dividend could be, say, 60%, could be 60%, let's say, right? Now, your dividend will diminish. It'll still be the same percentage, but as the share price goes down and down again, after you lost half your shares, well, the dividends go down as well. And the dividends will never make up for the loss in capital. We learned this in crypto years ago with things called smart contracts that were out before these covered call funds. And they worked very similar. So we learned these lessons. But you have ignorant people in communities that will tell you it makes no difference. Let me play an example of that for you right here.
It's a good investment or a good dividend payer, but there's a lot of rumors about it.
They're talking about Alti now. Now let me tell you why I love Alti and why it's different. Alti does not have the single payer, single stock risk. See, you know what destroys these funds? The mechanics of how they operate. You see, the more frequent the dividend, the harder it is for it to recover from the previous dividend. So your value keeps going down and down and down. You will be told that the share price doesn't matter. You have to reinvest to keep your portfolio value up. Well, what's the point of getting a dividend then, if I have to only give it back to you? And when you give my dividend back to me that I have to give back to you, I'm paying taxes on it like income. And now you want me to give it back to you to maintain the value of my investment. That doesn't sound right. It sounds to me either like we're being paid too much or bad fund manager performance. In this case, you know what it was? It was the underlier. It was Tesla. I mean, if we look in the last 6 months, right, Tesla went up violently, like $100 move. Of course, a covered call fund is capped and it can't do that. And keep up with that. But you see, what happens is when there are sharp downturns, the stock can easily recover. But the cap nature of an ETF that works with covered calls cannot. So we're going to talk to Jay. Can this be fixed in a prospectus? Anyway, let's continue. So we have learned that a reverse split in and of itself is just an accounting thing. Yes, it's 2 10s for a 20. But there's an underlying problem they're not telling you. What if it just keeps going down because of the fund's performance or the underlier? So let's listen to some of the ignorant community that's out there. And Jay, before our interview, I even want you to know that A lot of these investors in some of the other communities that you're speaking to, not mine, but some of the other communities, they don't even know the difference between a 30-day SEC yield and a distribution rate. A lot of them are what they call themselves as immigrants, dishwashers. I think they even said prisoners. So you really got to watch out, because these people may not read your prospectus. So let's listen to some of the ignorance around what we just talked about, okay, right here. What happens here to real people just happened in Defiance on another YouTube show that Jay's going to be on. They were mad at Defiance. The ignorant YouTuber even said we should sue Sylvia. You can't sue if you can't read a prospectus. Let's listen to this ignorant explanation by a fake rich person. Okay, his name is Matt. Supposedly he makes $700,000 a month. Well, that puts him in my category. Let me tell you something. If somebody is going to defend this and they make that kind of money, something smells a rat. I don't think they make anywhere near that, because they don't have the financial understanding or the understanding of the mechanics of how this works. Let's listen. This poor man is asking, but what about Ulti? Now remember, Ulti's my favorite. I have $250,000 in Ulti. It pays great. We love it. But it's not a single stock fund, so it doesn't have single stock risk. We're going to talk about this in my interview tomorrow night. Make sure you're subscribed and getting notifications. It will air Monday evening around 8:15, 8:30 New York City time. Look for a premiere. If you're not in my Discord, well, you won't be the first there. Sometimes YouTube doesn't want you to get rich. They don't send out notifications. Let's hand the phone over to Matt the Moron. First, an innocent man asking about reverse split.
Going, in a 4 or 5 to 1 reverse split. And I'm just wondering, do you think that's going to happen?
A 5 to 1 reverse split. Now, of course, Jay says there's been no announcement yet. Jay, we're not going to sit here and wait for a press release, because we know you all want to do it. You've been talking about it. And Jay, our conversation won't even have this tone. It'll be much more friendly. Don't worry. I'm kind of upset with these ignorant YouTubers right now. So let's just play this.
I would hate to see, because normally when they do those reverse splits, you lose your share count, and usually the dividend drops a bit too. So do you think?
He's absolutely right. But what fake millionaire Matt going to say? But if you're getting the same percentage, you're getting the same dividends. My friend. The dividend percentage is based upon the price of the stock. These people in Tesla already lost half of their shares. They're told to reinvest, put the money back that they give you. Isn't that cute?
You think about Alti as far as its future, because I watch another channel, and that guy and his whole community is saying they're going to Jay directly and saying, please do not reverse.
Let's stop right there. We're not allowed to talk about the Oracle. He's banned because he makes common sense. Anybody who tells the truth gets banned. Welcome to life under communist rule of a 4'2" Cambodian man.
Just stop right there. First of all, there's so many questions that you ask.
He gets so confused. Now he has to rely on Matt, the human Alexa.
Yeah, we gotta frame the questions, So
yeah.
Chips, do you wanna say something, because you have your mic on mute? Matt, I'm sorry.
Okay. Just for me to answer that one. And we've only had one of the Yieldmax funds do this reverse split. Okay. Now, before the reverse split, it was paying, 50 or 60%.
81 cents.
After the reverse split, it's still paying 50 or 60%.
That's a lie. Well, not really a lie. It's 50, 60%. Okay. But then the price eroded down again. But they didn't even get, even in Defiance, they didn't even get a month's worth. Immediately, the dividend dropped down. So you lost your shares, and instead of getting, like this guy thought, $1.62, you got 81 cents again after the split. So listen to this ignorant person.
Do I care? No. It's a moot point. It's the thing. If the underlying fund drops, so Tesla, it went from $250 to $108, that's going to hurt the premium they can generate. Okay? So yes, during that downturn, you are going to get less premium. And so your distributions are going to be smaller. But again, as it comes back up, like it has done,
No,
and
it
Tesla
hasn't.
has started to come back up.
Wait. So this is $12. 6 months ago, it was $15. Let's look at Tesla. Tesla 6 months ago was $177. So all the way up to $248. See, you can't really say that because a covered call fund, Matt, you don't understand, is capped on the upside. So this should have went back to $20. This thing 2 quarters ago was $130. It went up $100. Tesla's at the same price it was 2 quarters ago. It can't catch up. And if they keep overpaying to attract more people as a marketing thing, or just to give you what they call maximum yield, and maybe I'm not understanding, maybe they made money on time decay but they lost the trade overall. You can't pay out on money that you didn't make is really the thing. But let's listen to this ignorant guy.
Those distributions increase.
No.
So your yield increases.
No. The
And
distributions
if
don't
you've been
increase.
able to stomach it and stay in it and bought dips that made sense, so X-Day and...
Buying the dip on an eroding fund is absolute suicide. Okay, let's do this. Okay, let's take everyone's favorite. All right? So, you got in $26. You bought the dip, even your dollar cost average, well, you automatically drip. Maybe you thought this was a dip at 28. Right there. You bought the dip. Oh, it went to 30. Don't want to buy that. Oh, 28. Buy the dip. And then it just doesn't keep up because of the nature of a single stock ETF. That's not Yieldmax's fault. These people are
Any
ignorant.
other day that's had a reasonable sized dip, your average cost should be close to the current share price. So the question is, do you care?
Yeah.
Like, you want more shares?
No. I don't want more
to
shares.
create more dividends, to buy more shares. Here's the math for you. Like, if they did a 5-to-1 reverse split, let's just say ABC company was now $10 and they said, okay, it's $10, we're going to...
Alright, wait a minute. You cannot compare ABC company. I am assuming, Matt, that you're saying a stock. A stock could do a reverse split. And some people are so ignorant. They're so stupid. Splits are amazing. They did Nvidia, Apple, Chipotle. Means they ran so hard people couldn't afford it anymore. Reverse splits are how they sound. You ignorant dumbass. That's a forward split, moron. That's a good thing. And that's not in an ETF. ETFs never forward split. Ever. Ever, ever. Because most of them decline in value. So you are a fucking moron. I want to fight for Ulti. If they reverse split this 5-to-1, my investment gets destroyed. From what? 25,000 shares to 5,000 shares? And then, if this continues, all they did was buy time. All they did was buy time. All they did was buy time. And the payouts are certainly controlled. Do you know most funds pay out more in the beginning to entice you? Anybody in SMCI just got the $5 footlong. Yeah, they got a $5 dividend and then something bad happened to the stock and it dropped from $50 to $35. They'll never recover. Anyway, that's one of the new $50 funds. I say leave Ulti alone. I say build it back up. You're paying out 100%, pay 70 or 60. If you can trade, this has no single stock underlier. Build it back up. don't reverse split it. The entire community has spoken. Jay and everyone else, if you did not go back and read the comments under my videos about this, you have done yourself a great disservice, okay? Because people have lived through reverse splits, and we look at it as a cover story to cover a bad past performance, no matter what it is. People are blind in this. I've seen it before. I've seen this in crypto. They want to believe. This whole group is believers.
Reverse split.
Like a cult.
You had 1,000 shares and we're going to send it to $50. You now have 200 shares, okay? Let's say that it was just paying $1. Okay? If everything else remained equal, you now get $5 on 200 shares. So that's $1,000.
Not true.
If you had 1,000 shares at $1, that's still $1,000. So should you care? The answer is no. I get why some people are so gung-ho and
Matt, you're
caught
ignorant.
up over this.
It's happened with Defiance. Even the guy who hosts this show is pissed and will never buy a Defiance fund again. I'll tell you. I've heard from so many people in my comments that have said that they will unload all of their Yieldmax funds. Now I know that you like to listen to the community as a smart and innovative company. I love that about Yieldmax. And you went on a show with a bunch of uninformed investors who will be the first to turn against you. And what I really don't want, well, I'm not going to talk about that, but watch out for those people, okay? So people are saying, okay, that, Ulti could be a great fund. But look at this. If there was a reverse split on Ulti, I dump any and all Yieldmax funds. It's really a shame. Ulti has the potential. Do better, Jay. I will be out as well. I'll take the loss like a man. Yes, you are so right. I would definitely be transferring out of all Yieldmax funds. I commented on your post yesterday. We pay a management fee. I expect good management. Don't return my money and call it profit. Well said. And that's what I want. I'd rather I don't want a 30% yield. A lot of people would be turned off. 60%, 70% yield, okay. Maybe a smart yield. We'll talk about that. I'll even let you use that for free, Jay. Smart yield. Anyway. If they reverse split Ulti, I'm pulling out my 20K ASAP. But if the company cares, they'll care about you. If not, they'll be like, forget that jerk off. We got a passing parade. Once we go to $50, I'll do interviews with ignorant YouTubers. And you know what? Everybody will forget what happened in the past. And then, slowly, it'll start creeping down. Defiance did a reverse split just recently, and then they went to paying weekly. This way you don't even notice the NAV loss as much, right? Because it seemed, well, here's what happened. The same trend after the reverse split continued. Okay, it opened at 45, went up a little bit, and then every time they paid out, you lost money. So now you lost from, let's say it was 3 to 1. I think it was 3 to 1. It was $15 they reverse split it. So you had 3,000 shares. Now you got 1,000 shares. Now you're not making 3 times the amount of dividends. You're making the same or less. This guy on this YouTube video turned around and said, we're only getting 10 cents if you really figure it out. Yeah. So reverse splits are bad for everyone. You, Matt, are a fool.
But it makes no sense on something that uses options to generate your premium and pay your distributions. It makes a lot of sense if it's a normal company that just trades and makes money through buying and selling of goods or services.
Whatever. I've proven my point. And because of this, I'll tell you, I can't stand Defiance funds. I can't. I know, Jay, I won't say anything bad. We're going to have a great conversation. All right? And this is just some things towards the community that I wanted to get out this morning on a Sunday morning as I enjoy my black and bitter. So, Jay, it's going to be a lot of fun. I take my hat off to you because I've been crazy, okay? But I had to break my way into this field. Yeah, I attacked Rod, our resident spreadsheet cross-dresser. It's the sweaty pumpkin. I explained what bukkake means when you're buried in your neck up to the sand. Okay, up, in the sand up to your neck. That's why he's got that big chin and a bunch of men standing around your head and they bukkake you. So the key word, if you could spell it, if you stay to the end, is, no, even better, no reverse split ulti. They don't have to reverse split ulti. Show us that you can do it. Show us you're not a Defiance. Show us that Aldo, the dwarf trader, can really trade. Goodbye.